session starts. Right. Today we want to learn about head and shoulders. Right. We want to learn about head and shoulders. And yesterday, what we learned about flags, and we talked about how flags are trend continuation patterns. So generally, just to have a recap, we said flags, they depict an uptrend, right? They show us that price is in an uptrend, and the way that we want to buy a flag is we want to buy it as a continuation, right? So we said we have two types of flags. The first one being our bullish flag, and a bullish flag, it faces downwards and then it breaks going up. And then we said we have a bearish flag, and the bearish flag, it faces upwards and it breaks going down, right? Now, these are continuation patterns. So the need for us to learn a head and shoulders pattern is because it's what we call a trend reversal pattern. It's very necessary for us to learn about head and shoulders. Why? Because not everyone trades using specific highs, or not everyone trades using specific lows. So what constitutes of a head and shoulders pattern? A head and shoulders pattern constitutes of what we call a shoulder, a head, and a shoulder, right? And then a neckline. So this will be our neckline. Let me just draw it here, and I'll mark everything. So this will be our neckline, right? And this would be our head. This would be our head as well. Sorry, this would be our head, and this would be our shoulder. This will be our shoulder, right? So for clarity purposes, let me just type it in a way that we can see. This will be our shoulder. This will be our head. So let me type the head. This will be our head. And this will be our shoulder as well. Right. Now, this being a head, a shoulder, and a shoulder, we get what we call a neckline. Right. And a neckline, what it generally means is this is a point of break where we are expecting our head and shoulders pattern to come and break. Right. So the whole idea is we will be coming from an uptrend perspective. And then when our head and shoulders pattern looks like this means that it's reversing from an uptrend going to a downtrend. And then at the end of the day, what we are going to see is we're going to have what we call an inverted head and shoulders pattern, which occurs when we are reversing a downtrend. So what we're going to see is we're going to have a shoulder, a head, a shoulder, and then we break the neckline going up. Now, so what's the whole reason, or what's the whole concept behind this? The whole concept behind this is if we link this to market structure that we were doing, what we are actually saying is, okay, let me remove all this. What we are actually saying is we will be in an uptrend, right? We will be in an uptrend. But then what we are going to see is we are going to have one high, and that one high is going to get broken by price. When it gets broken by price, we don't term it a shoulder yet. Then price comes, fails to break that low. And then price comes again, fails to break the high, but then proceeds to go on and break the low for the second time. So this is now where we say we have a head and shoulders pattern. Why? Because we have one high that broke the previous high, and the other high failed to break the newly made high. Right. So let me just mark it here. We have one high that was broken, right, with a new high, but then the high that followed failed to break it. So what it does is it creates a zone which we call a neckline zone. And when that zone is broken, this fully justifies our head and shoulders. Now we have two types of entries for these head and shoulders patterns. One is what we call a conservative entry, and then one is an aggressive entry. What does it mean? It means soon as we break our neckline, if we want to enter with an aggressive entry or basically a risky entry, what do? Straight ahead, we start selling at the neckline. And then we have what you call a conservative entry, where we wait for price to break, give us a retracement back, and then continue. Now, someone would ask, where will price retrace back to if it's looking like that? So let's go and focus on that. We'll redraw our diagram. I want us to go on the actual charts, and then we talk about it as I show you. So again, we'll be having a shoulder, a head, and then the failure to break the low, the failure to break the high, giving us another shoulder, right? So by the time you discover that, oh, this might be a head and shoulders pattern, you might already be somewhere around here on your price before you break your neckline, right? So just for clarity and for standard things, let me just do this. Let me come and mark this area over here, which is going to act as our neckline. So soon as you get to that break, right, what you do is you enter a sell. Now, the only way you can be able to say I'm putting my stop loss is when you come and you sell your high, right? So normally you'd want to put your stop loss above your high, and then you let your trade continue targeting your previous highs, which would have been existing here, here, here. This would be your take profit points. Now, if you want to get into a conservative entry, what you basically do is you wait for price to come, right, give you a low, and then wait for the pullback. Now, what most people would want to do is they want it to retest the neckline and then they sell, right? But as for me, I usually advise that when it gives you a low, you wait for the retracement back to the 60. This is the perfect time where you are going to say like, okay, let me introduce my fib. And then you wait for price to retrace back and then you sell it, right? Remember, this is just a pattern, but what rules now is market structure. And soon as you get a break of the neckline, if you don't want to use terms like neckline break or a retest, what you can simply say is, if we want to revert it to market structure, we've had a break of structure here, where we are saying this is a neckline break. And where we are saying there's a 50% pullback, or there's a pullback for conservative entries, basically what you are just witnessing is price is just retracing back to gaps or those small OBs in those smaller time frames, and then it continues. And remember, like always, we've always said that when you're placing your stop loss, you place it above your highs. So at the end of the day, what you find out with these concepts is sometimes it's just the wording that changes, but the concept remains the same, right? So if you are having aggressive entries, there's a standard way of measuring take profit using head and shoulders pattern before it starts retracing. And that standard way is you measure from your high here to your neckline, right? And then that same distance is your take profit. So what you are willing to say is price is to walk the same distance, or it has to move the same distance that it did from the high to the neckline. And if you measure that from the neckline going into the direction of your intended price, that's where your take profit is gonna be, right? But since we now know that we use market structure, what you might find out is you can exit too early when you use this take profit model. It can come into a take profit, but then it will decide to continue with market structure. So this is one of the things that you really need to be careful of. I personally prefer to say, if I was in a high, right? If I was in a buy and I see that I have a flag, right? I wouldn't entirely base my take profit onto saying that if I measure my distance from my high to my low, then that's going to be entirely my take profit. Why wouldn't I say that? It's because I know now that it's market structure that's in play. And basically what I'm targeting is a move is these lows, right? So at some point you get disappointed. You come have an early exit, but then you find out that your price will continue going down. So at the end of the day, what's also important is you work with your confirmations. When price really confirms that, oh, okay, I've hit your take profit using this high to neckline measurement, and I've changed the structure, I'm now continuing to go up, that's when you can safely exit. But then at the end of the day, you know, if it doesn't confirm for you like that, then there's really no need for you to exit. All right. So the same applies if we are trading in inverted head and shoulders. And this inverted head and shoulders, what we basically do is we will be in a downtrend, right? So after this example, I want us to go on the live chart. We'll be in a downtrend, right? Let me do this. We'll be, oh, I don't know why it's failing to mark there, but let me do this. So basically, we will be in a downtrend, and then we get our shoulder, our head, our shoulder, which is our right shoulder, and then a continuation, a reversal, I mean. So the concept will still apply. What do? We wait for price to pull back for a conservative entry, and then we buy it. But then if you want to get in an aggressive entry, what we do is we wait for price to break the neckline, and then we enter. Where is our stop loss? Okay, let me remove this here so that it doesn't affect us. Where is our stop loss? Our stop loss is just below the high, and then we let our trade play. Do we have anyone with a question currently? I don't know why Zoom is not allowing people in. I didn't limit it. I'm seeing a lot of complaints that it's not letting other guys in. But who I'm recording this session so that they can watch it. Do you have a question at this point? Any question? So let's see how this actually looks like on the actual chart. Right. Remember, you can see this on currencies, you can see this on Weltrade, you can see this on Deriv. So it's something pretty much solid to say that this concept, if we want to turn it into a practical, we can actually see price playing both on Weltrade, on Deriv, and on currencies. So what we have here, if I can show you, I think we can all see that we have a head and shoulders pattern. Sometimes it's not going to be as clear as we expect it to be. So what we have here is we have our shoulder, we have our shoulder, and we have our head. And this is our neckline, right? And then what does price do? Price comes here for the first time, right? It comes here for the first time, gives us a shoulder, comes for the second time, gives us a head, comes for the second time, gives us a shoulder, it fails to come and break this head, right? Again, it fails to come and break this high, and then what happens? Price buys. This was a straight up trade. It never retraced back, but then it just went away, meaning that if you had entered using the aggressive entry, things would have been very okay for you, right? So let's look for another one. Let's look for another head and shoulders pattern. Let me choose a different pair. I can as well just go for currencies. So to see that whatever that we are doing on Deriv, it can also be done on currencies, right? There's something that I'm seeing here. And remember, this is a trend reversal pattern, right? So here we were in an uptrend. What do we see? We see that we had a head and shoulders pattern. And what happened? What we see is we have a shoulder here, we have a head here, we have a shoulder here, right? And what's the whole reason for me marking this? The whole reason for me marking this is when we had our left shoulder, right? Remember, we left a low here. We then came and gave us a head. When we gave that head, we failed to come and break this low, which is acting as our neckline, and then price gave us a right shoulder, which failed to come and break this head. So now at the end of the day, what we see is we have a head and shoulders pattern, and let me mark it clearly. We have a head, a neckline, a head, a neckline. We have a shoulder, a neckline, a head, a neckline, a shoulder, a neckline, and then a break. And then what does price do? It comes, retests, and then it falls. So remember, as long as this is showing on the right place, as long as it's showing on the right place, then it's valid. If you see a head and shoulders pattern in the middle of a trend, what you basically see is, let me do this. What you basically see is, let's say you're in the middle of a trend and it's looking like this. In the middle of a trend, you'll be buying, right? Let's say this was for a buy. And then it's looking like a shoulder and then a head. And you feel like this is another shoulder, right? This is possible. Sometimes this can get invalidated, right? And then you feel like this is a head and shoulders. No, this is not a head and shoulders pattern. Why? Because already it has broken the previous high, right? And then sometimes price can just choose to say you have something that looks like a head and shoulders, and then you get into an early entry. But then what you see is because of structure, your price will continue. This means this head and shoulders pattern was not validated. And besides, remember, we have two types of entries. We have the risky entry, which you enter at the neckline. This one never reached the neckline. So if you get into early trades, sometimes you risk your head and shoulders pattern getting invalidated. And then you start saying, I think I saw a head and shoulders pattern, but then it got invalidated. All right. So that's one thing to be careful about. Right. So let's continue. I'll give you one last example. Pretty much from our head and shoulders patterns, there's really nothing much to, like stress very much because it's a simple and straightforward topic. So let me show you this. I would want to work on this head and shoulders pattern again because I've discovered something that I didn't show you again that I talked about. So here we have a head, we have a shoulder, neckline, head, neckline, shoulder, and then a break. So if you're an aggressive trader, generally what you're doing is you are marking, let's say from this high here to this neckline here, and from that high to that neckline, what you are basically doing is you take that same distance, and that's the same distance that you're going to measure as your first TP. Right. Your first TP here was it, because I think we can all see price is down here. It just gapped here. Right. So now imagine this was your first TP, but this was your overall TP. And you say, just because I'm measuring that distance, I'll exit. But you're missing out on this trade and the other bigger move that price is to give us. So if I'm placing my take profit correctly, like I said, I'll start by saying, let's say that was my entry. I would put my stop loss just above here, and I'll put my stop loss just above the high, somewhere here. And then I would say my take profit would be, I would target this first low. I think we can all see it. Let me mark the low so that we see it. I would target this first low over here, right here, and then I would wait for price to move, and then I would take my other target is this low over here, which price is targeting. We have another low over here. These TPs have been hit, and I would target another low over here, right? I think you can see all TPs have been hit, all these lows have been cleared. So if I wanted to base from just this take profit here, I would have lost out on taking profit on this low, this low, this low, and this low. So I'm hoping that we are understanding the whole concept here and how we are taking profit and how we are still setting up our stop losses using the flag pattern strategy. Sorry, the head and shoulders pattern strategy. Again, what you would see is I wouldn't want to force trades, but since this is again inverted, what you'd see is, remember, these head and shoulders patterns, these are just reversal patterns, and they are not going to come as clear as you see them on your textbook. So what you're going to see is we have a shoulder and a head and a neckline here. And what did price do? Let me do this. What did price do? Remember, we have a shoulder, a head, and a shoulder, and then our neckline here. And then what did price do? Price came, started buying. And where are our take profits? This take profit, or this high was it? This high was it again? This high was it again? And then it reversed again. So basically, these are concepts that you can apply on real life charts and profit from them. And you still make money. So for this morning session, this is what I had to share regarding the head and shoulders pattern. Sorry if I was sounding a little weird. I've just gotten up from my sleep. But well, what we can do is we can go practice this, try to see this, and train our eyes just to see, you know, how best you can mark your head and shoulders pattern. And from the trades that I'm going to be taking out during the day, I'll also share the entries and I'll also share the analysis using this reversal pattern. So key points to remember: head and shoulders pattern is a trend reversal pattern. We only find it when we are reversing the trend. We have two types of head and shoulders: the one that reverses a buy and the one that reverses a sell. And we have a neckline with two types of entries: conservative and aggressive. And the best way we can target our take profit points is using the previous highs. Right. So thank you for attending, guys, and thank you for your commitment. I'll post this session on YouTube as well as Telegram. Let's have a great day.